Bloomberg Audio Studios. Podcasts, radio, news.
Let's get to the OECD with its latest economic outlook saying President Donald Trump's aggressive trade policy is abruptly setting the global economy on a path of slower growth and higher inflation. The organisation saying, quote, significant risks remain. Further fragmentation of the global economy is a key concern. Joining us now to discuss is the OECD Secretary General Mathias Cormann. Mathias, welcome to the programme, sir. It's fantastic to get your insight on the global economy. When you downgrade overall global economic growth, can you lift the lid on that call for us and just go beneath the surface? Where are the biggest downgrades, revisions to growth on a country-by-country basis?
Well, on a country-by-country basis, I mean, the biggest impacts that we see are in Mexico and in Canada, for obvious reasons. But if I just go back, I mean, at a global level, we are downgrading our growth outlook for this year by 0.2% down to 3.1%, and next year by 0.3% down to 3%. And I mean, it's a function of the data pointing to a weakening in the global economic outlook, but also inflation remaining more elevated than we had previously anticipated. Of course, the very high levels of policy uncertainty, which is weighing on growth, because of its impact on both consumers and investor confidence and likely future investment decisions.
Secretary Mathias, how much do you see the U.S. getting penalized just as much as the rest of the world when it comes to downgrading the growth trajectory as a result of tariffs? Or is it still the idea that the rest of the world will see a bigger hit than the United States?
Well, we do see a negative impact on the economic outlook in the United States, but it's a lesser impact on the basis that the US has a comparatively large domestic economy, of course, and trade as a share of GDP is of less importance in the United States than what it is in other countries around the world. I mean, in particular, when we look at Canada and Mexico, who have got very comparatively higher trade exposure as a proportion of their economy, but also and in particular high trade exposure to the U.S. market, then clearly the impact there is somewhat more significant. But the impact is also material and negative in our outlook for the United States.
How much do you have a framework to even price in what the outlook is for trade? I mean, we were just talking about how April 2nd, hopefully we'll get more clarity. We hear from every company the issue isn't just the tariffs, it's a lack of certainty around what the policy is going to be. How do you even come up with a model for this?
Look, I mean, we are making certain assumptions, and certainly, I mean, for us, we work on the basis of what is announced and or legislated policy of an elected government. But the uncertainty in itself is certainly weighing on growth. But as a matter of general principle, what we would say is that there is, when it comes to global economic growth, when it comes to continuing to lift incomes and living standards for people in countries around the world, keeping markets open, having well-functioning global markets, having a rules-based trading system in good working order is still the best recipe. And to the extent that there are issues between countries in terms of fairness or perceived unfairness, in terms of policy issues that need to be addressed, that is best done through bilateral or multilateral dialogue rather than through unilateral measures.
To build on Lisa's point, your calculations don't account for what Trump is set to announce on April 2nd, also some other items he's announced, like a 200% tariff threat on European wine, cheese, and champagne coming into the United States. So after April 2nd, or maybe a few months after that, June 30th, do you think you're going to have to revise down some of your growth forecasts?
Well, we are pointing in our revised forecast today, we are pointing to significant downside risks, including, when it comes to further trade fragmentation or increased trade tensions because of further measures, which, clearly would be a further negative in terms of the global economic outlook. I mean, at the moment, we can only make our assessments based on the decisions that have been made and announced so far. But if further decisions in the same directions will be made down the track, then, of course, we would have to revise our assessments assessments. But on the flip side, I mean, there's also positive opportunity. If countries around the world decide to work together to resolve some of these issues, in a better, more efficient way, not relying on tariffs and other trade restrictive measures, there could also be a positive impact on the global economic outlook.
Well, one positive has been the Europeans, and they've been energised on the policy front. They're willing to spend more on defence and infrastructure, and perhaps we can finish the conversation there. That view, that move by the Europeans has been widely celebrated. Can we finish on some words of caution for them? Do you have any?
Well, look, I mean, as a matter of general principle, investment, increased investment in infrastructure, in particular, increased investment in productivity enhancing infrastructure, is a good thing and is an important part of the overall increase in international competitiveness, and it should be part of a broader plan. But of course, in the end, it's all a matter of what is fiscally affordable and fiscally sustainable as well. And part of our advice to countries around the world, including in Europe, is to keep an eye on debt sustainability and on the need to rebuild fiscal buffers and fiscal resilience.
Mathias, enjoyed the conversation. Great piece. It came out early this week. I'm going to give it a good read a little bit later on. Mathias Cormann there, the OECD Secretary General.